Pankaj Murarka as well joining in on the show. Pankaj, anything looking attractive from a risk-reward perspective, or when you're staring at a market like this where there has been quite brutal selling pressure over the past many days, you just sit it out and wait for the dust to settle? Is that the advice?
No, not really. I think we find a lot of companies which have reached a price point which is very attractive for an investor who is willing to have a medium-term perspective. In the short-term, markets can be volatile because of the overhang of rising rates and sell-off from foreign investors. But for an investor who has a medium-term perspective, I think this is a great opportunity to buy into some of these companies. Especially, for example, we've been quite positive on private sector financials, especially the larger names. They've underperformed over the last 1 year, but we think from here on they'll start delivering on the growth, and valuations are very attractive now after this sell-off, so we like them. We've been positive on engineering and capital goods as a sector because we see very strong and healthy signs of revival of India's investment cycle, which has been virtually missing for almost last decade. And as a result, we find attractive investment opportunities in that sector as well. So the point I'm trying to make is for investors who want to have a medium-term perspective, it's time to nibble in and start buying into it and not bother too much about what will happen to the listed equities over the next week or 10 days. But I think that markets will settle down somewhere over the next few weeks.
Over the next few weeks. Until then, I guess it's best to just sit it out. I wonder what the take is when it comes to those large cap financials. You know, we were just having an interaction with Shankar Sharma a short while ago, and he was alluding to the fact that even when it comes to the marquee names, the returns over the last 2 years have really failed to spark any sort of interest, and it's not really been very rewarding for shareholders. From a risk-reward perspective, outlook on private sector financials, Pankaj?
Essentially, markets are always forward-looking. So I don't think so that the last year or last 18 months returns are the right judge to make an assessment on the future outlook for businesses, because obviously these businesses went through a cycle during COVID where there were apprehensions about they might have significant bad loans on the balance sheet, but actually the way things played out, the bad loans on the balance sheet of these companies or incremental bad loans were far, far lower than what everyone was fearing. And now that the economy is normalizing, probably this is the first financial year where India will experience a normalized financial year in the post-COVID world. These companies are emerging out of crisis far stronger than where they were when they entered the crisis. They have very high capital adequacy ratios, and I think we are at a point where we are seeing an uptick in trade in the economy. So I think all the pieces are aligned for some of these larger financials to deliver a very healthy growth from here on from a medium-term perspective. And given the fact that they have not performed effectively means valuations now have become far more reasonable than where they were 2 years back. So I think private sector financials, especially the larger ones like ICICI Bank, or a state bank for that matter, or HDFC Bank, make a compelling investment case from here.